Hello everyone, this is Evan here from the Trade Risk on Friday, August 5th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off looking at some individual names. Before we get into things, I just want to remind everyone, if you enjoy these videos, if you find value in these videos, please do subscribe on the bottom right-hand corner to our YouTube channel. Makes me happy, keeps you up to date with all of the latest videos that we put out each and every week. Now, getting into the markets, Friday's session, S&P 500, the SPY ETF closed up 82 basis points. Really nice day, really nice way to finish out the week for the bulls. And if we go to the weekly chart, because this was the end of the week, we closed up almost 0.5% on the week in the S&P 500, 49 basis points. Now let's take a look at this weekly chart while we're here. Notice this weekly breakout to new all-time highs is still very much in motion ever since July, where we broke out to those all-time highs. And more recently, the past 2-3 weeks, we were consolidating sideways, and this Friday is what really led us to a new kind of closing high. So let's go back to that daily time frame. This is the range I'm looking at. This is the range that we've been in now for 16 days, and this Friday is where we finally started to resolve it to the upside. Now, it didn't come easy. This was met with some a false breakdown here on Tuesday as we tried to kind of probe the lower end of this range, run some stops, get the bears excited, shake out the weak longs, and ultimately we did stabilize over the next two sessions, Wednesday and Thursday, which led to the catalyst of the jobs number here on Friday to break us back out to the upside. So this, a little bit of trickery in here, but this very low volatility, overlapping sort of indecisive environment, which has been fueled by a lot of rotation, and we'll get into some of that in the sector analysis, is just really continuing that same kind of grinding higher in the context of this long-term uptrend. So, the bulls clearly back in favor now, new closing highs here. I think to get more concerned now, you have some very clear-cut levels below us. If we fall back into this old range below 217, that would obviously be a sign of kind of let off the gas and wait and see if this breakout's really going to be for real. And then certainly the lows here from Tuesday at 214.50, that's going to be ultimately your sort of intermediate, or consider it short-term still, line in the sand if you want to be long this market tactically. So you get some clear levels to use. Bulls back in favor here, and it looks good heading into the week, into next week. We've been really light in here at about the second half of this consolidation ever since, roughly this end of July here is when we got really sort of more defensive. We participated on the long side quite a bit, all in here into the beginning part of here. And then as this started to really start to overlap and congest a little bit, we really pulled off the gate. We actually did get short the S&P 500 earlier this week at the very beginning. We managed to take some profits around 215, and we did get stopped out of the rest today on Friday for a small loss. Now, we had longs on the other side of that, but, we were trying to be tactical here. The bear side clearly didn't work. The short side didn't work, looking for a 1 or 2 day pullback. We got 1 day, but we couldn't quite get that second day out of it. So it's been a mixed bag. We did increase our long exposure here on Friday as we start making new highs, and we're going to continue to roll with this rally until we get more convincing sign that we shouldn't. So that's sort of the way we're playing it. We've upped the long exposure now heading into the weekend. We'll see how that fares, and trying to stick with some of those leading sectors and names under the hood. If we go to the IWM, this also saw a nice pop today, 1.4%. Notice here, like we talked about in our weekly recap, earlier this week, we really just kind of failed to kind of hold this breakout level above 120.50. So notice about the 26th of July where we came up here and we kind of broke out above this little 8-day range. We went sideways and then we broke below it. That was the shakeout in the IWM. But then we stabilized and, of course, now popped back to highs, continuing this trend higher. IWM weekly time frame grinding higher, still looks good. Momentum making new highs there on the weekly time frame. That's very constructive. And the Qs, arguably the strongest now, the most leadership here by the Qs, just given the breakout of this 2015 all-time, or multi-year 15-year highs from that we had in place from 2015 were now taken out. Really not much of a hesitation here at all. We kind of just cut right through this like a knife through butter. We're just kind of trending higher. We had a little kind of just one stutter step day, but really we've been continuing to kind of grind higher here, and I think that's very constructive action for this sector, which is a large sector and an important growth sector for the market. So very constructive here in the Qs, and you can see the gap today and just kind of went closed not quite at all-time highs. It's 16-year highs. I think there's back in 99 we did have some a higher close there in the NASDAQ 100. So everything looks good for the Qs, the IWM, the SPY, back in motion, bulls in control. Let's take a look at some other markets now. TLT, other side of the coin here, not looking so hot, starting to actually look a little vulnerable. Now we have our lower high that we put into place here just last week on the 29th on Friday, and you can see we came back down, slammed into the support, bounced off of it, and then made it a kind of a little mini lower high here, and we're back at this support level. So TLT looks like it's going to be in trouble if we see any more follow through to the downside. Could have early signs of a trend reversal here on the daily chart. Keep a close eye on that. Gold also suffering a little bit of pain here on Friday, gap down 1.8%. This was a trade that we were in, so we did feel a little bit of this pain today, and we got involved in it here back on Wednesday of last week. We did sell about half of it into this day right here, so we did lock in those gains, and we were trying to ride out the remainder of our position, but we got caught with this gap early today, sold out of it on Friday. A nice little gain overall, but still certainly didn't get any more of that follow-through move like we wanted to see. Clearly looks like it's in consolidation now in this sideways pattern here. Silver, similar situation, back below this breakout level, so notice silver was kind of leading here. We broke out above this $19.30 level, and now we're coming back below it. Look for this range to maybe start to develop. 1840 was where the bulls stepped in just a couple of weeks ago. Let's see if they can do that again. USO found some support, some stabilization here this week. Had a pretty brutal kind of slide lower throughout the mid-July here, and it did find some support at $9.30. That's your reference point right now. It's got certainly a lot of work to do, cut out for it as the bulls try and kind of continue this bounce higher, but this is certainly going to be a reference point to keep on watch next week. If we come back down and test this area, that's where the bulls are going to want to step back in. And then natural gas also kind of starting to consolidate a bit here, had some pretty violent moves recently. This big move, 7% move up, gave it back, saw a nice pop higher, gave it back. So really kind of choppy, wide range here. Let this develop out. We were in this trade for a little bit as well recently, but we're no longer here. So just keep an eye on this kind of range. Keep an eye on these highs at 860. Keep an eye on these lows at 790. I think those will give you some clues and context heading forward. Now, getting into some of the sector analysis, let's start here with financials, which we discussed as perhaps the key to this market, as this range was really tight, and they saw one of the most explosive moves sector-wise on a relative basis here on Friday, up almost 2% by the financials. That's a big move, and notice it's coming at a big inflection area. This is important. This weekly chart kind of paints the picture here as we've been making a series of lower highs and higher lows, tightening up in this triangle. Well, we're starting to finally break out above this $24 level, and it looks like there's some momentum here in the financials. Very important for the market to see some leadership in the financials, and that's the rotation that we were sort of talking about at the top of this video. Not surprisingly, XLK, this is where we also talked about a lot of leadership. The NASDAQ 100, the Qs technology, making new highs here. Very impressive, lots of strength. And the semiconductors also continue. This has been a theme for a while now. The semis were really the breaking out and leading us higher much earlier in this rally, and they continue to do so, still acting well. And even the industrials also saw a nice little kind of break higher of this perhaps flag consolidation, retested this breakout level of 57.50, and now it's starting to get going again on the upside. Industrials looking pretty constructive. Really the downside here, the big laggard, is XLU, and we did put this out and rewatch our weekly video, we talked about how this was vulnerable here as it came back down into support. Well, we actually finally saw a break of this support. So this is something that you got to be careful of now. Weekly charts still in bullish formation, but the daily chart, you could be at early stages of some type of trend reversal. The MACD, you can notice, starting to curl over, 820 curling over now. So just be aware of there. And to a lesser extent, the staples, not as bad, but still weak on a relative basis in those defensive areas. So heading into some of the individual names, we'll briefly look at Apple again as this continues to work higher here, up 3.14% on the week. The gap is clearly intact, never really got tested besides that initial day, and it's just kind of been off to the races, continues to look real good there. Netflix had a very impressive day, 3.84% here on Friday, and it looks kind of similar to Apple where you have this trend line that extends down from 2015, and we're getting to this challenging level now where we've failed several times in the past. Let's see if Netflix can get, say above $100. I think if it can start to clear above $100, that'll get certainly those intermediate, longer term time frame traders, trend followers, breakout traders interested in this type of trade in this stock. So to keep an eye on Netflix, showing some nice strength here on Friday. Google up next. This is a trade that we got involved in today. I like Google here. Look at this nice rectangular consolidation pattern, multiple year, about 14 months or so, going sideways in between 700 and 790. We got the breakout off of earnings, had a little bit of consolidation, and it looks like it's trying to get going. Highest close, all-time high close today. So let's see if this can continue. We're long Google, looking for some more. Twitter, one that's performed exceptionally well this week, 9.74% to the upside. We lost 9.4% last week. We basically completely reversed last week's candle. That's very constructive. You notice Twitter did have earnings. It filled the gap pretty quick. And now I'd say the tough work is going to be ahead of Twitter heading in, going into next week. Can it get above $19? Can it take out resistance? It reversed last week's damage. It filled the gap. That's constructive, but now we need to see, can it actually continue? Are there buyers that are continually interested in breaking it out of this range that it's been in since January of 2016, so about 7 months? That's going to be key for Twitter. That's what I'll be watching next week. And finally, let's end with GoPro. We haven't discussed GoPro in a while. Kind of like Twitter, right? This has been moving sideways since the beginning of this year, 2016, between this $10 level and $14 more or less in this range. And you can see it's to the top end of it now. It's up at this $14 mark, and this is where the real work's going to start. Can the bulls, is there enough energy here to kind of break us above all of this previous supply where they failed multiple times in the past, and kind of start repairing this weekly chart? That's going to be very important for GoPro. Keep a close eye on both Twitter and GoPro in similar formations. That's it for today's video. I hope this helped you guys out. Remember, do subscribe to the video if you enjoy. Thank you for watching. Have a great weekend, and I'll catch you guys next time.